Welcome to the Same Day Podcast, where we discuss driving incremental business growth and other topics related to real estate, property management, and entrepreneurship. Now to the show at hand.
Matt Zalk here. I'm the host of the Same Day Podcast, where I connect with top business leaders and real estate experts. Today, I've got Dr. Jeremy Weitz here from Rise 25, who's done thousands of interviews with successful entrepreneurs and CEOs. And we've flipped the script, and he's going to be interviewing me. But before we get into it, I'd like to point out another couple of episodes from the podcast. Check out Scott Reeves from Chickasaw Community Bank, Mike Bosch from Atento Capital. Over to you, Jeremy.
Man, I'm excited, because this episode is about going over budget, right? No mistakes ever happen. There's never an over budget in the world, right? And so, but you are totally one of those people when you meet, you are totally open and honest. And I'm like, are you sure you want to talk about this, Matt? You're like, yeah, no problem. So we're actually going to be talking about a project that went over budget. Before we jump into it, today's episode is brought to you by Keyrenter Property Management. And at Keyrenter Property Management, they are a full-service property management company helping clients buy, renovate, and operate real estate assets. And ultimately, Matt, really what you do is you help clients build wealth while taking the headache out of property management. And you were telling me a story of when you helped Ryan and Jason turn non-performing 14-unit property into a 100-plus unit portfolio of renovated single family and multifamily properties. So I know you help a variety of different types of properties. It could be single family homes, condos, townhomes, apartments, and you have the management solutions that people need. And if people want to check this out, you're like, I don't want headaches. I just want to build wealth, right? My time is very valuable. You can go to keyrentertulsa.com, keyrenteroklahomacity.com, or keyrenterarkansas.com. And you could also email their team info@keyrenterpmc.com. So now, before we dig into the over budget, just tell people a little bit about your company and how it came about.
Yeah. So kind of as you said in the earlier, Keyrenter helps clients buy, renovate, and operate real estate assets. That could be connecting our clients with real estate agents, that could be connecting our clients with wholesalers, and that's given a perspective on a property before that property gets purchased. In fact, today I had a conversation with a young lady who is trying to get out of a property that she recently purchased, and I called her and I said, if you had just called us and asked us before you had purchased a property whether this property was a good thing to buy, I would have told you no, and you wouldn't have made the mistakes that you made. Now you're trying to sell it. Sure, you might make a couple of dollars, but your long-term objective is not to make $10,000 on the sale of a property, but rather to have a property that cash flows monthly for 10 or 15 years. I wish you had just called me. She said, well, everything's, clear in the rearview mirror. And I said, that's true. But next time you buy a property or you want to, just call me and talk to me, and I'll tell you whether I think it's in a good neighborhood that's going to yield long-term value. So we help our clients buy, renovate, and operate real estate assets. That means we can do all the renovation. We can take a property down to the studs and bring it back. We can do, minor make-ready stuff, painting, carpet, flooring, whatever it is. And then obviously we manage the property once it's renovated. And if it's not renovated, we can manage it also, right? It doesn't have to be renovated. You're just going to get more. You're going to get more rent for a renovated property.
I wasn't even thinking of that, Matt, but that's a good point. People should call you before, because you have your finger on the pulse of these areas, and you know what is market rate. You know actually what people can get. So you are kind of their expert consultant in the beginning, I imagine.
Right. And the problem in this case wasn't that we can't get good rents for the property. The property's nice, just in a bad neighborhood. So some vagrants came through and stole all the copper out of the AC unit. It's unfortunate. It's really hard to stop that. Even though the AC unit's sitting in a cage, it's hard to stop them from stealing the copper. And she said, well, I get good rent. I said, well, that's okay. You can buy that same property. If you're buying it for the right price, then knowing that you're going to have to spend $1,000 every 2 years or 3 years to fix something can be budgeted into your financials, right? So your pro forma of the property. Doesn't mean you can't buy it. It just means that the price that you're willing to pay probably goes down a little bit to account for that increase in operating cost. So, as long as you're buying something for the right price, there's a price for everything. You just want to make sure that you're not overpaying, thinking you're buying one thing, and in fact, you're buying something else.
So, Matt, there's a project that went over budget. And first of all, how did this person find you, and what was their situation? when they first came to you?
Yeah. So let's call this gentleman Tom, and we'll say Tom's from Arizona. I'm going to protect our client for obvious reasons here as we get into it. Tom, it gets introduced to us through a wholesaler, Joel Cadleck from Fixed Properties, great wholesaler, has lots of deals. He's always looking at interesting stuff. And Joel sells Tom a property. Tom calls me and says, "Hey, Joel referred Keyrenter to me. I need some help doing the renovation. I also, by the way, have 27 other properties that I'm under contract for. And when those 27 units come under, when the deed actually transfers over, I'd like you to renovate those or help me renovate those and manage those." I said to Tom, "That makes total sense. What are you going to do on the first one?" He said, "Well, I'm going to bring my crew from Arizona. I'm going to bring them out there and I'm going to have them renovate the project that's first coming under contract." And I said, "Okay, that doesn't really make sense to me. First and foremost, bringing your crew from Arizona means that you've got to house them. Sure, you might pay them $1 or $2 per hour less. I don't think that's actually the case because I don't know if labor is that much cheaper in Arizona, but you're going to be, let's consider for a moment that you're going to pay them a couple of dollars per hour less. You've got to house them. You've got to feed them while they're here. Maybe they stay in the property while it's being renovated. I don't know. It's kind of strange, especially if the AC is not up and the plumbing doesn't work. And it depends how deep the renovation is. But I said, look, why don't you let us do the first one? If you like the way we do business and the way we do the renovation, then the 27 will be a natural extension of the first one. If you don't like the way we do the first one, then the 27 will naturally go somewhere else. You'll reconsider who they go to and why they go to that different company. And after thinking about it, he said, "You're right. Let's not bring the crew from Arizona. Let's rather have you guys do the budget. You guys do the renovation." So as we naturally do, we put together a budget. And I should take just one step back at this point. Originally, 5 years ago, when we started Keyrenter, we did a lot of renovation projects, and it was on me. I did it. We were running through renovations, and that really ran the gamut from stuff that I owned personally. We were taking down to the studs, and I used to buy stuff for $12,000, $15,000 and put in 75, 80 grand and have a really nice renovated property. And it went from that into, just doing a little bit of interior, exterior painting and having a make ready, a made ready house. Last summer of 2021, we inherited a portfolio of 64 properties. 25 of them needed to be renovated, and it became evident that I needed help in this. I was, at the time we had, 40 or 45 people. Now we have 75 people in the organization. And I didn't have somebody that I could outsource or that I could, delegate the responsibility for the make readies. And these are, again, deep make readies. They can be, $25,000, $30,000, $40,000 worth of work. So I hired Seth Rice on my team, who's he was a journeyman electrician, was tired of being an electrician, knows the construction industry really, really well for the last 20, 25 years. And he does all of our renovations. So when Seth joined right about the time that Tom's property was coming on. And I had started with a budget and I had started the make ready process. I had started with a little bit of plumbing work that had to get done. And I, in the process, passed it over to Seth. Well, Seth had this great spreadsheet and everything got approved. Tom said, "Yep, I like this. I like this. I like this." Like we were doing interior painting, exterior painting, we got to replace windows, whatever we were doing, he was okay with. The challenge was we didn't have a line item for materials. And that's painful because materials in today's world are astronomical, right? Supply chain constraints and general supply chain issues have really driven material costs up. I mean, OSB used to be $12 a sheet. Now it was up at $85 a sheet. It was back down at $50 a sheet. Now in June of 2022, it's back up at $85 a sheet. So they're just huge fluctuations, huge variabilities. And we didn't have a line item for the materials. So we get to this renovation, we put a new garage door on, we borrow some shutters from another project that we were ripping them off of that looked good on this house. We painted them. They looked great. We did the interior, exterior, we put granite, new counters. We extended the countertop, the whole thing. It was beautiful. Can lights. We did a really, really nice renovation. And we go through and we get like $1,550 for the rent, which is in Tulsa, Oklahoma for a 3-bed, 2-bath in Broken Arrow is a really nice rent price. Much more, $200 more than anything else in the neighborhood and anything more than in excess of what Tom was thinking we would get for rent. So comes down to it and he goes, "You guys did a great job. I didn't have to think about it. I didn't have to make any decisions besides the initial budget. I didn't have to, pick paint colors or swaths or anything else, swatches, whatever they're called, whatever else. And you got great rent. The only problem is you're $20,000 over budget. And on a $65,000 total project, we had to do some foundation work and some other stuff. That's 30%. You guys are 30% over budget. That hurts me. And I was like, you're totally right. And he called us one day and gave us a real stern talking to. Basically said, you guys screwed up. And we said, we did. It sucks. We did. You're absolutely right. And what we're going to do about it is we're going to make sure that material costs, because we can't really estimate them on the front end. We don't have a scientific way of estimating. Taking a contractor and going to bid out all the prices, besides being a complete waste of time, is also, in today's environment, a futile exercise, because prices go up and down, up and down, up and down. If I don't need cabinets cabinets is a bad example because you need a 6-week lead time or so. So you're going to buy them early anyways. But if I don't need sheetrock for 4 weeks, the price of sheetrock could very easily be 50% or 60% higher or lower than it is today. So it makes no difference to give you a price on sheetrock if I need 70 sheets, right? It just doesn't matter. So we say, cool, we're going to make an estimate that the material price is going to be 80 to 100% of the labor cost. And that's what we do nowadays. That's how we estimate it. That's how we've done it for a year now and it's worked perfectly. But Tom came to us afterwards and said, on the 27 units, it's going to a different property management company, because I can't afford in this scenario for 27 units to be 30% over budget. And I don't have faith that you guys are going to be able to tighten in, rein in what you're spending over the course of those 27 units. And that was a painful moment. I mean, it hurt. We had established a great relationship. He trusted us on doing the right thing and using his resources judiciously. He trusted us on getting the work done quickly and doing it well, but he didn't trust that we weren't going to spend more than he was expecting us to, even if it was an honest mistake.
Yeah. And it was more like a communication thing. Like you had to factor in those, the line item materials later, because there was no point estimating, where
right
now you tell them up front, hey, by the way, we're communicating this up front instead of after, like, hey, there's actually, this is for what we're doing, but this other is just for the actual costs of us buying the materials itself.
Right.
So, okay. So that's painful. You're like, you see this, okay, 27 properties. We're not going to do them with you. What happens next?
So the 27 properties went away, managed by another company. And I was talking to Tom. Every once in a while, Tom would call me, I'd call him, and he'd ask me for advice. Who do you think I should use for HVAC? Who do you think I should use for what do you think the right, process is for, should I put in sheetrock before I do the foundation work? Whatever the question was, he'd ask me. I'd chat with him and I'd give him my honest perspective. At some point he said, hey, I've got one more property that's coming down the pike, and I want you to do the renovation work. And we said, cool, we'd love to. We'd love for you to, we're happy that you're willing to give us another shot. And we're happy to do the work and make sure it doesn't go over budget. So again, we did a beautiful renovation. We pulled out a shed from the backyard. We added a phenomenal bathroom where there was just a junky piece of, just a total mess of a bathroom, added can lights, redid the kitchen in its entirety, pulled down a wall, made a pass-through bar area, added a laundry room, just made a master that had 2 bedrooms and was really configured, made it an appropriate bedroom. We just did a great renovation, and again, got killer rents. It was out in Sapulpa. We got $1,150 for a small 3-bed, 1-bath. So great rents. And again, Tom said, wonderful. I know that when I give it to you guys, all I have to do is fund the account. And I don't have to worry about the quality of the renovation. I don't have to worry about it renting for what you say it's going to say, what it's going to rent for. All I have to worry about is funding the account. I love that. I don't have to manage it. I'm not in the business of managing rental properties. I'm not in the business of managing construction projects. I want to do my core business so that, I can make enough money to fund these projects and build wealth over the long term. We said, great. So we did that project. And then he called me and he said, I'd like to bring over the 27 units. What does that look like if we bring over the 27 units? And I said, tell me what's going on. And he said, well, fundamentally, we got in a little bit over our heads. We've got, I don't even remember the numbers, but we bought them for $1 million. We have $200,000 of holdback money. And I'm like halfway through my second renovation and I've spent $150,000. I've got to renovate 27 projects, 27 properties. This is obviously not sustainable. This doesn't work. We're upside down on the project. But I don't have a good solution. Obviously, we had a very long, I spent an hour with him on the phone talking about raising external capital and how to fund the accounts so that you can actually do the work and the merit of doing the work and how much should you give away of the total deal in the event that you're actually going to raise, another $1 million to do the work, et cetera, et cetera. But I said to him, I don't know if it makes sense for you to bring them to us. Maybe one by one, it makes sense, but I just don't know if we have a better solution considering you don't have the financing lined up. Because fundamentally, this is a financing issue. He said, well, the current management company, they haven't, collected all the rent. They haven't even brought over everybody from THA, the Tulsa Housing Authority that we wanted them to bring over. So they're just so behind. I can't get communication from them. I can't get a clear understanding and a picture of what's going on, et cetera, et cetera. There's 100 problems, but in the end, I said, I think you should just leave them. We're going to, we charge $100 per occupied property to bring them on. So you've got some that are occupied that we're going to charge you for to bring them on. Of course, there's a ton of work in bringing on a property, especially if there's a Tulsa Housing Authority tenant in the property. But in addition to that, it's, going out and meeting the tenant, putting a notice, getting them into our system, making sure that the ledgers are correct. I mean, there's just a lot of work that goes into bringing on those tenants. I said, keep the properties where they are. It might not be the best management company. You made that decision, and I respect that decision given the information you had at the time and the way you were feeling about us with that specific project and the budget overrun at the time. But let's leave them where they are and let's talk in a couple of months and see how you feel after that. And that's where they left.
Yeah. Yeah, it's a tough conversation in the beginning when you go over budget just because of the materials not being communicated, and then then they want to bring all the business to you, and it's a tough conversation because you're looking at that portfolio like it's your own and looking at to see what actually makes sense from a financial perspective. But, in the long term, like if he raises raises funds, then, he just sees you as a trusted advisor. And that's what
that could be.
He sees you as. I'd love to hear, on that topic, what are some, people make mistakes along the way in this process, right? And so what are some of the mistakes you see people making either on the front end, during, or on the back end when someone's buying a rental property for an investment?
So I think one thing that people do, people often say, I'll hear a husband or wife say to my husband or wife, I always tell my husband or wife, you don't have to live here. It's just a rental property. It's here to generate income. I think that's true. You don't have to live there. So if you're a doctor and you're trying to invest in rental properties, your house at home, your primary residence might be a really nice home. You might have marble floors and you might have granite countertops and blah, blah, blah. And that doesn't need to be the case in a rental property. But that doesn't mean your rental property can be a total piece of crap either, right? I mean, it needs to be livable. So I find that people buy houses that need renovation, that need upgrading, and refuse to do them on the pretense that I'm not living here. It's a rental house. And that's true. But if you want high quality residents that pay rent month after month and that accept rent increases at lease re-signing time, they need to be nice houses. So can you upgrade a little bit? Sure. So paint that's fresh, door trim that doesn't have dog bite marks from the previous resident and their pets, carpets that don't smell like pet dander and everything else. Upgrading a house, there are simple things you can do to upgrade a house in a way that makes it far more livable. Again, a fresh coat of paint, a little bit of wood trim, fresh flooring, some light fixtures. We put can lights into all of our houses now because it makes it so much brighter and nicer. The environment is so much better, and it doesn't cost that much to take out the old crappy, light fixtures that hang down and put in can lights. It's really just not that expensive. So I think one thing is you don't need to live in the house, but it also can't be a piece of crap. If you want to rent it and you want to get top dollar and you want people to stay, it needs to be nice. So, and that kind of cascades through the second part, which is you as a landlord might not be paying the utilities, but the resident of the property understands the all-in cost of living in that house. And if the windows are old aluminum windows and they're leaking air and you've got holes in various places, potentially because a mouse or a rat chewed through places and it never got fixed properly. But if you're leaking a lot of air from the overall envelope, the resident will feel that. Their heat bill will go up, their gas bill will go up when they need to heat the house, their electric bill will go up significantly when they need to cool the house. And they're going to look at the end of the month or 2 months or 6 months or 12 months of a lease and they go, my rent is $11.95, but I'm paying $300 a month in electricity because there's no insulation in the attic. I'm paying $150 in gas because there's no insulation in the attic. I'm paying, all these ancillary costs because there's a leak in the water line from the main on the house side of the meter, from the main meter into the house. There's a leak somewhere. So I'm paying exorbitant water bills, and they will move as a result of that. One thing we did years ago is we hired a plumber on staff to help us out with smaller stuff because I knew that I couldn't get a licensed plumber a contractor as opposed to a licensee. A licensee can also be a journeyman, just to be clear, but a contractor that needs, that is doing $5,000, $6,000, $7,000 gut plumbing redo jobs, right? That's running all new PEX and all new PVC into a house. They're not going to want to do a $65 hose bib change out on the back of a house. But a tenant that knows that we're dripping $40 of water a month because their hose bib hasn't been fixed in 15 years and is just dripping out, understands that's
it's probably happening to me right now, Matt. As you say that.
Let's go check. Let's make sure. But a tenant that's paying $800 a month in rent that pays an additional 5% for water wastage knows that they're going to leave the house. Now, the owner doesn't know that they're leaving the house because there's that problem, most likely. I know the owner doesn't know whether they moved to Dallas because they got a job or they moved down the street because they moved in with their in-laws or anything else. But I know, and I wasn't able to solve that problem. Our main big plumbers weren't able to do those small jobs. They just didn't have the capacity at the time. It got worse in COVID, but even before COVID, we hired our first plumber, and now we have two, to be clear. But when we hired our first plumber, it was because we couldn't do those small jobs, and I knew I needed to have those small jobs fixed. And if I couldn't triage the jobs and say, I need your time over there spent on this small job, I was doing a disservice fundamentally to my owners.
Yeah. So it sounds like the upgrades is not just for aesthetic purposes, but it's actually for functional purposes. And I also on the front end, people probably more times they don't at all come to you before they even purchase a property. Yeah. And what are some of the front end questions they should be asking themselves before even, purchasing?
So I think a big one is the neighborhood long-term going to be going in the right direction? There are plenty of cash flowing cheap properties in Tulsa, Oklahoma. You can buy them in neighborhoods where, like I said earlier, you can buy a house for 40 or 50 or 60 or 70 grand that will rent for, 5, 6, 7, 800, 1,000, 1,025. And in fact, the person I spoke to this morning said, I'm getting great rent. I paid $75,000 for this house. It was move-in ready and I'm getting great rent. It's 1,025. The challenge is, the challenge fundamentally is that I got to turn this. I got something buzzing in my ear, even though I have. So for somebody that buys a house for $75,000 that thinks that 1,025 is a really good return on that investment, it should be. In isolation, it definitely would be. But if you have to go through and make repairs, unnecessary or otherwise unnecessary repairs, because the neighborhood, other residents in the neighborhood or outside of the neighborhood are breaking in and are destroying things or stealing copper from the AC units or doing whatever else, then obviously it reduces your return on investment. You're having to pay for those things over and over. So one important thing is contact us before you buy a property. And we don't always make friends in this industry, right? Sometimes people call us and say, so-and-so referred me to you because you could do the property management. And I say, please don't tell them I told you this, but don't buy that property. And it's happened so many times. There's 61st and Peoria is a rough area of Tulsa. And it probably happened 3 times. So we were in discussions with an owner that wanted us to manage the property. Property wasn't doing well enough for them to feel comfortable with our fees on the management side. So they managed it themselves for a little while, but it was a terrible property and they were really struggling. So they were trying to sell it. So every time they would try to sell it and have an active buyer, they would send that person our phone number. And I had 3 or 4 people call me. And eventually I suspect that they figured out what was happening and they stopped sending people to me. And I don't know if the property ever sold, but every time they call me, I would say, I don't know why they send people to me. I'm the person that says, don't buy that property. And I've told them, sell the property. That property is a terrible property. It's never going to be in a better neighborhood. It's never going to have fewer problems with the boiler and the chiller system. It's never going to have the caliber of resident that you want. So sell the property. So I don't know how many times they sent me through people, probably 4 times before they figured it out and stopped sending me people. Or the 4th person didn't listen to my advice and bought the property anyways, never called me again, whatever. But that happens frequently. People call me and say, I'm under contract for something, this location. I say, why? You should not buy there. That's where locals do their best to make, to put lipstick on a pig and sell it to people from out of state that don't know any better. Don't do it.
So general rule, first of all, Matt, this is great. General rules, call them first before you do anything to get their advice because they're experts. Right. And I want to just point people, Matt, to check out more episodes of the podcast. And, depending on the state or city, you can go to KeyrenterTulsa.com, KeyrenterOklahomaCity.com, or KeyrenterArkansas.com. to learn more. And Matt, thank you for having me.
Yeah, appreciate it.
Thanks for listening to the Same Day Podcast. Tune in to a new show each week and be sure to subscribe to get future episodes.